Hi everyone, it's Grace. Welcome back to my channel. So we're in the last quarter of 2021 and hot real estate markets such as Miami is cooling down. So far, I have gone through all the macroeconomic factors which have major impact on the housing market. In a poll that I did yesterday, I asked which one of the following has the biggest impact on the housing market. 8% of you says debt ceiling, 66% said Fed taper, and 26% said a supply chain shortage. So in today's video, we're going to look at all these three macro factors and also more accurately forecast the 2022 housing market combining these macro and local factors. I will be covering Miami as well as other metropolitan areas and cities with the highest year-over-year growth. Before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. First of all, there are two things that you absolutely have to keep in mind. The first one is debt ceiling and the second one is stagflation. Even though the debt ceiling debate is still going on, both parties have made it very clear that the US will never default on its loans.
Defaulting on the debt would lead to a self-inflicted wound that takes our economy over a cliff.
The American government will never, ever default.
Okay, I heard it. And here's a quick shout out to John Molino, who explained the political situation well. And thanks for your critique. If the US ever defaults, the world economy will just hit a suicidal train wreck. And the US dollar will probably lose its central currency position in the world, and nobody will buy treasury securities again. Another train wreck is stagflation. In 1974, because of the oil price surge, inflation just suddenly jumped to 8.3%. Clearly, Nixon's price control in 1971 didn't work. As long as the Fed was still buying bonds, inflation continued to go up until it was completely out of control in 1980 at 12.4%. And Volcker, the chairman of the Fed then, had to raise the federal funds rate to double digit to curb the inflation. However, the unemployment rate also increased significantly in the same year. In the early 1980s, we experienced the worst economic recession. So history has spoken loud and clear that stagflation is very destructive to the economy. So now let's take a look at the bonds buying behavior of the Fed. In the September CoreLogic report, home equity has gained a total of $2.9 trillion in the second quarter of 2021 on a year-over-year basis. If you count the mortgage-backed securities that the Fed started purchasing since April 2020, which includes $580 billion for the month of April and May 2020, and an average of $114 billion per month from June 2020 till now. So that's a total of $2.1 trillion for a period of 16 months since last April. So now you understand why a large chunk of the home equity in the real estate market actually comes from the mortgage-backed securities purchased by the Fed. Here's another shout out to Street Money 21. You point out that the $40 billion per month is just the base amount and the actual amount is actually much more. Thanks for your critique. So clearly, the Fed purchasing mortgage-backed securities is the locomotive that's driving the housing price. And here are two things that home equity favors: inflation and supply shortage. There's no doubt that a double-digit inflation will bring up the home value straight to a rocket ship and go up by at least 5 to 10 folds because real estate is a natural hedge against inflation. And supply shortage will increase the home price and equity as long as the supply doesn't catch up with the demand. And if we ever go to that point, believe me, basically all homeowners will retire right away. But there are also two factors that the stock market doesn't favor: inflation and supply shortage. The stock market shows the health status of the economy, which is made of countless corporates and businesses. High inflation means that the prices will go up and demand will be sluggish. And supply shortage means that companies have little to no inventory to sell. So if companies don't have anything to sell, how do they make money? And how does the stock market grow? And that's exactly what's happening to the stock market. The market indexes like S&P 500, Dow Jones, and Nasdaq are going down now. I hate to say that the energy price is soaring, but it's time to get out of these major stock indexes and move to the energy sector such as crude oil. So if the Fed continues buying bonds without tapering, a stagflation will come 100% with a complete train wreck. This is especially true that the September inflation rate is back to 5.4%. Yeah, inflation is definitely not transitory. Starting in the third quarter, we're seeing many central banks starting to scale back the stimulus plans. So let's go back to reality and see what the real situation is. According to CNA News, the US Fed, European Central Bank, Scottish Reserve Bank, and a Bank of Canada all have near-term plans to start tapering as early as the fourth quarter of 2021. After the tapering is over, interest rates will be raised to reduce the inflation rate. But this has to be done in a gradual manner to avoid major disruptions in the financial markets as well as the housing market. So as early as this November, the Fed may start tapering, and it will slow down the growth rate of the housing price. So now let's take a look at the performance of the hot real estate markets as of August on a year-over-year basis. For the metropolitan areas, I chose 8 of the national technology hubs. These are traditional and semi-traditional tech hubs with median to high year-over-year gains. Seattle is at 23%, San Francisco is at 18%, Phoenix is at 32%, Austin is at 45%, Atlanta is at 21%, Raleigh is at 23%, Tampa is at 26%, and Miami is at 16%. So these are the metropolitans with the largest population clusters, and we'll see slowing growth rates as soon as the Fed starts tapering. So you should pay very close attention to the timeline. And I also include the top 20 cities with the largest growth above 30%, with the highest being Boise City, Idaho at 46%, and the lowest is Boone, North Carolina at 31%. In one of my past videos, I explained that the real estate markets are reshuffling. So this is basically a combination of moving from high-tech state to low-tech state and working from home trend. In the West Coast, the housing market shows a migration pattern from the West Coast to mountainous regions with more competitive housing price. I can understand why people are moving to these regions with more savings and better living environments. Montana, Idaho, and Colorado have so many beautiful mountains and rivers. People who work in high-tech, management, or other high-paying jobs whose companies allow them to work from home probably have the monetary and environmental incentives to move to these areas. Wouldn't it be nice to look at the mountains just outside your window, take a stroll in the forest, or just walk by the riverbank after a long day's hard work? It surely makes sense to me. The cost of living and raising kids are also lower. I think the health crisis driven by COVID-19 makes people rethink the purpose of work. Is it really worth burning out the physical and mental health just for the sake of money? Probably not. And this also applies in the Sunbelt states. Arizona, Texas, Florida, and North Carolina are quickly becoming new tech hubs. I mean, the Bay Area is still the traditional main tech hub, but the cost of living is just too much. And with climate change, companies have to come up with solutions to address natural disasters such as drought and wildfire to improve the quality of life for both current and future residents in the Bay Area. This cluster here around Phoenix has Amazon, Apple, PayPal, with an average of 33% growth. By the way, I'm hosting a YouTube live event with Dr. Jen Zhou from the University of Arizona, who develops a new physics solution to COVID-19. The event will be held on October the 24th, 5 to 7 p.m. Eastern Standard Time. And trust me, you don't want to miss out. Click here to check out the event trailer and register. And now, moving to Austin, Texas, which is probably the new Silicon Valley with Facebook, Google, Oracle, Apple. And well, Elon Musk, SpaceX, and Tesla are in Austin as well. So wherever the tech giants are moving, that's where the most job creations will be. In Florida, Cathie Wood is moving ARK to Tampa Bay. In North Carolina, there's Apple and Google in Raleigh and Durham. So technological development is the main engine that's driving urban development and job creation. So these tech hubs and cities will see long-term home equity gains despite some short-term market volatility. So what does it mean for sellers? In this winter, the energy price surge, continued supply shortage, and persistent inflation before the Fed tapers creates a small window of opportunity to quickly gain home equity. If you're a seller who wants to benefit from the largest home equity, this is the last chance to do so, and the sooner the better, because the Fed's tapering amount directly determines the growth rate of the housing price. What does it mean for investors? The housing market growth rate will slow down as the Fed taper kicks in and flattens out as it finishes, which should be around the second or third quarter of 2022. So if you're an investor, the good news is that the investment threshold will be gradually reduced, and the cap rate will increase as the rent to price ratio increases. The bad news is that the highest growth rate of home equity is already passed. And these cities in the map will give you a fairly good idea of where to invest your money. Remember, technology creates high-paying jobs. Jobs drives in population, and population increases home value. What does it mean for buyers? If you're a buyer, especially for the first time, the best time to buy is when the Fed finishes tapering and before the interest rate hikes, because that's when you'll pay the lowest price since the pandemic and take full advantage of the low mortgage rate. So you should pay very close attention to the Fed tapering timeline, as well as when the Fed starts to increase the Fed funds rate. And this may well be into the third quarter of 2022. So this is today's video about the 2022 housing market forecast. I hope you find it useful. If you have any questions, comment down in the section below. As always, thank you very much for watching, and I'll see you on the next one.